Hello, everyone, and welcome to the big show. This is Investing and Trading Live, sponsored by Trading Academy. If you're a first-time listener, thank you for stopping by. I am your host, Josh Lilquist, and with my good friend and my good pal, and he is the one and the only, as always, Mr. Al Connickson. Al, how are you doing today?
I'm doing well. How are you doing?
Hombre. Everybody remembers that show, Friends, when Joey was trying to sell that cologne. He was hombre. Yeah. So I got to ask you, how you doing?
I'm doing well, and I'm looking forward to the show as always.
Yeah, we have a good time talking about the financial markets, and it's we've been doing this for I don't know how many years now, several years actually, over almost 1,050 episodes on the podcast. So on Investing and Trading Live podcast, and that's wherever you listen to podcasts. But we're trying to make this the global financial show because I think a lot of listeners would appreciate hearing how the markets, first off, how they work, but also how it really is reality for us as the public or the retail investor. And there's a discrepancy on how, and we were talking about this a little bit before the show, on how the average investor is told to invest, which is the public or the retail, and how the Wall Street professionals are investing, or the mutual fund companies, how they're actually investing for you. And they're doing something that's usually totally the opposite.
Yeah, it could be a reason why they do so much better than the public.
That's a possibility.
You know, we might just be able to talk about that.
Let's talk about a lot of that. But our sponsor, Trading Academy, over 27 years now, teaching people just like you how to invest in the markets, how to trade the markets, whether you're looking for an income strategy or maybe it's a wealth strategy, retirement, 401k, IRA. And we've been teaching people that are brand new how to get started, but also if you've been an investor for many, many years, if you're looking or need more consistency, there are strategies that are designed for that. So we're going to talk a lot about all those strategies here today on the show, Investing and Trading Live. And just before we do that, a quick market update. As we know, the stock market, as far as the major markets, indexes have been continuing to chug along. The S&P 500 around that 545 area. And I'm looking at the ETF right now because I think that's what a lot of people are looking at as a trading instrument.
Right. An ETF, by the way, is an exchange-traded fund, which is a basket of stocks that represent something like the S&P 500.
Correct. It trades just like a stock. So you have the SPY for the S&P 500, the Dow Jones, right around the 392-ish, depending on when you listen to the show. And this one has been lagging behind a little bit. It hasn't been at all-time highs for since May, so that was a little slower. That's the DIA, the diamonds. Then you have the Qs, that's formerly known as the NASDAQ, the QQQ. That's roughly around 480, 481, 82, depending on what time you listen to the show here. So that one near all-time highs as well. So that's the ETF for that. The IWM, which is your Russell 2000. This one's been a lagger of the four, we'll call it, and way off the highs. But it has shown a little bit of life here since really, I guess we'll say 2024. So it's showing its face and it's back into action again, and an opportunity for investors. Looking at gold and silver as well. You look at gold roughly around $2,325 or $27, depending on when you listen to the show here, but it really has been a little sideways for a little bit after it hit all-time highs back in the middle of May. Silver, almost $30 per ounce, about $29.15, depending on when you listen to the show here. So this one also had an all-time high back in the middle of May, but seen a little bit of a retracement of about 11% since that high. So is that showing signs of inverse correlations with the markets or correlations? We talk a lot about these correlations, and that's whether it's doing the same thing or if it's inverse, it's doing the total opposite. And that really hasn't tracked the markets lately, so it hasn't been a safe haven. Bitcoin also slowing down. That's down to about 62,000. So we're just seeing some great volatility in the markets. Nice slowdowns, which opportunities in down markets, which we'll cover here today. But Al, it doesn't really matter which way this market goes. And I want you to just talk real briefly about why, when you understand how the markets work, you understand that there are strategies for different directions, why don't you care which way this market goes?
Well, if you can benefit when the market's going up, and you can benefit when the market's going down, and you can benefit when the market is sideways or flat, then it really doesn't make any difference. You're benefiting. That's the bottom line. And let's just kind of cut to the chase. We mentioned earlier that there's a difference between the Wall Street banks, the institutions, the pros, and the retail traders. If you look at a 20-year annualized return starting in 2002, the average investor, the retail trader, the public, saw about a 3.6% average annual return. The S&P 500 itself, maybe the SPY, the spider that you talked about, that did about 9.5%. But then you've got the big institutions, the hedge funds that are maybe getting high double and triple digit returns.
And that's actually data that you pulled from, where did you pull that data from? Yahoo Finance or something?
It was Yahoo Finance.
There you go. So this isn't something we're making up. It's pulled from a source.
The numbers are out there. It's easy to find that. But what's controlling this market right now? What's important to pay attention to? It's earnings. We're still in earnings season. It's also the market responds to the yield, the treasury yields. They've been going up a little bit. And then to be honest with you, it really comes down to NVIDIA. As NVIDIA goes, so goes the market. When you look at the S&P 500, you look at the NASDAQ, NVIDIA and a couple of other stocks like that, Apple now and Microsoft, Amazon, those are the stocks that have been moving this market. When you talked about the Russell 2000, the mid-cap, the small-cap stocks haven't done as well. This has not been a full participation movement in the market. It's been very highly concentrated.
NVIDIA's down about 12%, probably since they did their split there. I would assume that's when that happened.
It has, and so as a result of that, it's put downward pressure on the S&P 500. That has happened. When you see NVIDIA have a good day, you see the NASDAQ go up and the S&P 500 show strength. But here's the problem, Josh, that the majority of the public, the retail traders, the people listening, lose or do poorly over time. The problem is that they almost all trade the same way, and they make the same mistakes, but they keep doing the same things, and it's because that's what they've been conditioned to do.
Yeah, I think that's insanity. People doing the same thing over and over, looking for a different result.
A different result, right?
And that's why I really appreciate, when people are coming into these investing classes that we do here at the Academy, I really appreciate they have an open mind to see what's actually available, because they're tired of it. Remember that commercial, I forget what it was, it's my money and I need it now. And I think it was back in the late 90s or early 2000s.
J. something Wentworth, I think it was.
I don't remember what it was. But if you remember that commercial, that's kind of what people are saying. It's my money and I need it now. I don't want to wait 20, 30, 40 years. I don't want to have...
Or it used to be my money and I no longer have it.
Exactly, yeah. So they want to take action and not do the same thing over and over again. And they want to make something for their future, whether it's monetary or time or schedule. It doesn't really matter what that goal or objective is, as long as you act upon it. And I want to invite people to this investing class to get started in the financial markets, whether you're brand new or if you've been investing for many, many years, how to do things more consistently. Simply just call or text the number 952-905-0975. When you text, just text trading. 952-905-0975 for 2 seats for an investing class. This is Josh and Al. We will be right back.